At the end of this video, you're going to be in a position to show what exactly is supply chain and how does it impact organizational performance, what profitability actually means, and what are some ways a supply chain manager can help with profitability. Okay, first of all, if you find this video helpful at any point, just make sure you subscribe, okay? And hit the notification bell, hit the like button. In fact, hit all the buttons. It's free, and those things do mean a lot to me. Now let's move on. The impact of supply chain management on business and corporate performance. First of all, the supply chain is the network of links that tie together the production and distribution of goods and services from producer to consumer. And to practically understand what is going on here, because I mean theory and then you do these and then you're like, yeah, we understand. Look, let's look at it from a practical angle. And in this case, let's assume that you are dealing with a coffee shop. Okay, so you make latte, sell them, blah, blah, blah. You are basically your own version of Starbucks. From a supply chain perspective, the first thing you need to be the first thing that will happen in this coffee shop of yours is the raw materials supply, which is the first link in that supply chain. And that means upstream operations, okay? So when you talk about upstream operations, you're just saying the suppliers and the suppliers and the suppliers, because the other version is downstream operation. We're talking about the buyers and the buyers and the buyers, all right? So in this case, let's assume these things are coming from different countries. Yes, you could be getting raw materials from your country, but let's assume they're coming from different countries so that supply chain is actually bigger. So that means coffee beans from Ethiopia, right? Milk from your local farmers, sugar imported from, say, Uganda, right? Then those things have to be processed, right? So the processing, because they have to be turned into something that can actually be used. I mean, otherwise, what exactly are you doing with coffee beans directly from the farm? Right, so the coffee beans are harvested, dried, and roasted by a coffee processing company in Ethiopia. Milk is pasteurized and packed or packaged by a dairy company. Sugar is refined in Uganda, okay, in a Ugandan factory. Again, as I say, the idea is to put them into something that can actually be used. Now, the next thing in this supply chain is transportation and logistics. So the roasted coffee beans are shipped from Ethiopia to your country. Milk is delivered daily by the dairy, refrigerated vans, and then sugar is also delivered. And these companies, the logistic companies, are going to have to deal with, the clearance, customs, and things of that nature. So those are things that you just have to know that can also affect how things move in the supply chain, because everything in supply chain just depends on the logistics. Like, how do we get things from point of origin to where they are needed? Right, now the next thing is retail and customer service, so your downstream operations. The coffee shop grinds the beans, froths the milk, adds sugar, serves a latte to the customers. The assumption you're making here is that things are moving one way. See, that just leaves the supply chain open. But then to close it, we can also have reverse logistics, where things move the other way. So reverse logistics in this case, because in most cases when you talk about reverse logistics, you're assuming that you bought something, okay? You bought a thing, it's not functioning, and therefore you return it. That's just one aspect of reverse logistics. So in this case, our reverse logistics will be in the form of used coffee grounds are collected and sold to farmers as organic fertilizer. The shop recycles packaging waste through local recycling companies. So this way, the supply chain loop is closed and you have sustainability. And sustainability is an important thing. It's one of those things that we take for granted because it has been politicized, and then there are a lot of yahoos who just do things. Like, you see them on the road with their banners, and then like a car won't pass, and then if you ask what's wrong with it, we are, I don't know, sort of demonstrating against using petrol or something. We're not about that. We're talking about sustainability in this case. We're talking about whenever you're using something, okay, your ability to benefit from a thing in a way that doesn't affect the future generation's ability to benefit from the same thing or things along those scenarios. Like, the fact that you have water in your house doesn't mean that you can now leave the taps open, and then when somebody asks you, say, yeah, well, I'm paying for them, okay? Or something like electricity. So you have another room, the bulb is on, or the fluorescent is on, or the lights are on. And then when you ask, you're like, yeah, well, I can't pay for that. No one is questioning your financial capability. We're just talking about using the thing in a sustainable manner. So the same thing happens with the supply chain. Anyway, moving on. So the most successful businesses in the world have made it a core part of their strategy to develop their supply chain capacity and management process. How does supply chain impact on the performance of, be it the corporate level or even the business level? That's the question here. And it will do so by, the following. There is improved material flow through the business. Effective supply chain offers data from one step of the process to the next through the use of customer and supplier relationship management tools. It helps the organization know how to respond to the market. But then the question at this point becomes how supply chain impacts profitability. Now, before you look at that, okay, let me just quickly point out that if you're serious about starting your supply chain related business, so in this case, something like logistics management business, I've developed a PDF with, I think, 19 or so business ideas that you can pick from, okay? And that's one of the many resources that you can get. So this is just the first one of them. And these businesses, I've looked at them in terms of the cost, okay, associated with starting any of them, whether or not it's easy or not easy to get into that market, as well as the level of technology, okay, so tech complexity associated with your business idea. So make sure you access that one. Details are given below, okay? So let's move on to the next thing. What is profitability? Profitability is the degree of financial benefit that a company accrues from undertaking. This is typically the difference between the cost of undertaking an operation, making a product, or fulfilling a service, and the price that goods or service can be sold for. But it's not just enough for a company to be profitable. Okay, companies want to have various sources of revenue or income, which means various sources of profits. And that means making strategic decisions regarding how to go about that, right? It is an equivalent of somebody who sells an ebook or a book, okay? So they can think, well, you can sell this in hard copy, you can sell it in soft copy. We can also do a podcast about the book. You can do a YouTube video. You can do some movie. All those are various ways in which they are making money from that one product. Now, the strategic decisions regarding profits in companies can be through the following. Number one, you can have something like markup on profit. So a markup is a percentage figure of the cost of production that is added to all goods and services sold by a company. For example, cost of production, let's say that's 100 per unit. Cost of fulfillment, that's $20. And so the profit in this case is 12. Why? That is 10% on cost. So markup here percentage was 10% on the cost. What was the cost? 100 plus 20, that's 120. 10% of that is $12. And so the total charged to the customer will be 132. So that way you can have our 12 in profit. So the thing with markup is that you need to understand that just because you can increase the percentage, your markup, okay? And then that means you're going to make more profit, because in this case you say 10%. But then let's say you put it at 20%, so you're making more profit, right? But without really increasing the number of sales. What you have to factor in is that that will increase the final cost of that thing, okay, or the price. And then that could also mean that you're going to lose out on your sales. So not all products you can do that. You always have to ask yourself, is the market price sensitive? Of course, there are certain things you can get away with that. For example, luxury brands. In fact, it would appear that in those markets, the higher the price, the more the people assume that that product is. It's like those the Louboutins, those shoes with red soles, ones for Christian Louboutins. So yeah, of course the price is high. Why? Because the sole is red or something. I don't know. It's just perception that people have in terms of luxury brand. The more expensive it is, the better, and therefore they buy. So that's one thing that a company can do, markup. Now, number two, reduction in cost of production. So this actually goes to you trying to achieve the cost leadership. Meaning what? Meaning in this case, as an example, so cost of production could be 90 per unit, meaning a 10% reduction in cost. Remember, initially it was 100, right? That's what we're using. So the cost of fulfillment still remains the same, it's 20. And so our profit in this case is going to be $22. That is a 16% profit level. So what is happening here? So the total charged is still going to be 132. All right? So that's that, it's still 132. So in this case, the price you're charging is the same, it's still 132. But what have we done? We've just reduced the cost of producing that thing. So if our competitors was producing it at 100, as we are doing it at 90. So there is that. So this is why understanding your supply chain is important, because it will mean renegotiation of supply terms and costs, finding alternative suppliers, finding substitute products, optimizing the specification. This could include repackaging of goods to optimize size and storage space, partnering with other companies to obtain bulk discounts, reverse engineering the products process to identify where products may be optimized, optimizing in services such as reducing the cost of transport, communication, and time lags between stages of production. Okay, right. So let's catch up. We've said that if you want to, profit, right? You can do that by, number one, just markup. Okay, playing around with your markup. Or number two, reduce the cost of production. And the third thing that you can do is fulfillment costs. So in this case, the cost of fulfillment covers the logistics, shipping, packaging, and delivery of goods to the end customer. And sometimes the cost can also include things like if you invoice. So there's a cost of invoicing. If you receive money, there's a transfer or charge on that money. So all these are just costs of fulfillment. So from our example, cost of production is 100 per unit, right? And then now the cost of fulfillment, we are reducing that one by 10%. So from 20 to 18. So that gives us $18. Profit in this case is going to be 14. That's a 12% profit level, because we are still charging the same amount, $132. Now look, from a supply chain point of view, because if you're looking at those ones, you're thinking, well, how exactly does a supply chain manager comes in? As a supply chain manager who's trying to help their company to make profit, the choices in this case, what we've talked about cost of fulfillment, we've talked about the cost of production, and also talked about the markup. Now, the markup, that's going to be an accounting decision for the most part. But the cost of production and the cost of fulfillment, those are areas where the supply chain manager can really help the company to make more profit, because most of those things just involved dealing with aspects of supply chain. Like in production, you're just dealing with aspects of supply chain, with a few exceptions in terms of R&D, okay? So the research, the engineers, and all that stuff, right? But then you can do that. You can help with costs, of fulfillment and cost of production. Now, the other way that you can also increase profit as a supply chain manager is through inventory holdings, inventory management. You want to make sure that you are not having unnecessary stock, because that just means you're incurring the cost associated with holding those stocks, and that reduces your profit. Okay? So if there is any question, let me know. Now look, if you're thinking of starting a supply chain related business, make sure you watch this video. It will help you to avoid most mistakes that will lead to you failing in your business. Right, see you in the next video.